Hey, so one of the most common questions that I get is, how do I know my financial projections are realistic? And one of the best ways to ensure that your numbers are realistic is to compare them to industry averages. But I've often found it difficult to find a reliable source to be able to send our customers to say, here is a reliable and easy to use format of industry data for various different industries that you can use to compare your projections to. And so we actually set out to try to solve this problem. We found a good, reliable data source in the IRS sole proprietor tax return data. So they produce and publish tax return data from the nearly 28 million small business sole proprietors in the United States each year. And they provide a whole bunch of financial data. And so we took that data and organized it a bit and made it a little bit more usable for our clients to be able to compare their projections to industry averages. And I'm going to walk you through how to access that data, how to find the data that we pulled together, how to use it with a set of projections that you've created, and really compare and understand whether your numbers make any sense in your forecasting or business planning process. So before I jump into that, just a little bit of background. My name's Adam Hoeksema. I'm the co-founder of Projection Hub. And over the last decade, we've helped over 50,000 entrepreneurs create financial projections for all sorts of various industries and businesses. Today, I'm really focused on trying to help you understand whether your numbers are realistic and showing you some industry data that will help you do that. So with that, let's go ahead and dive in. Okay, so for the example, what I'm going to do, I've pulled up our fine and casual dining restaurant template here, and we have a set of projections already kind of pre-built in, and you can see some revenue numbers, some cost of goods sold assumptions, gross profit percentages, net income percentages, and these are going to be helpful numbers for us to then compare to industry averages and see whether we seem to be in the right ballpark. So the first thing I wanted to do was just show you kind of the raw data from the IRS. So the IRS produces and publishes tax return data from sole proprietors in the U.S. Every year, and even though we're here well past 2019 now, we decided to go ahead and take 2019 data because 2020, 2021, even 2022, we think still have some strange impacts from the COVID pandemic. And so we wanted to focus on kind of normalized industry ratios, normalized numbers. So that's why we're using 2019 data. Now, the next thing I want to point out is what the IRS reports and publishes is the number of returns, so the number of tax returns in a given industry, and the total revenue for that industry, and then the total dollar amount of expenses in these various different categories. So in order to actually make this usable for you, there's a bit of work to do. We needed to divide the total revenue by the number of tax returns in that industry that they had to be able to come up with kind of an average per business. And from there, we then wanted to understand all of these numbers as a percentage of total revenue. So we wanted to understand, cost of goods sold as a percentage of revenue, and not a raw dollar amount is not that helpful to us because every business is of a different size and a different location, and a restaurant in New York City is going to be different than a restaurant in the middle of the country, right? And so from a dollar amount perspective, but from a industry ratio, from an expense ratio perspective, they might be relatively similar. And so that's what we're trying to get at here. And so we did a bunch of work and cleanup on this data to try to turn it into something usable for you. We then produced a number of articles for 40 of the kind of top industries. And within each industry, one of the things that we did is we took the top 9 or 10 top expense line items and produce those as a percentage of revenue for you. So for restaurants, for example, this is the breakdown of expenses, the top 9 or 10 expenses as a percentage of revenue. We found that food cost on average was 36%, salaries and wages 20%, rent 7%, utilities 4%, and then we get into some really small percentages that aren't all that meaningful, right? And so I think the main takeaway here is that even just by looking at the top 9 or 10 expenses in most industries, you can really figure out the key material numbers that you need to be focused on and kind of be within the realm of reason on your projections. So you've created a set of projections. You've gone and found our industry report for the most relevant industry for you. You found this table for your industry that kind of breaks down your expenses as a percentage of revenue. And I should say, in all of those reports that we've done, we've also added things like net profit margin as a percentage of revenue, cost of goods sold as a percentage of revenue. And so there's some more data in those reports that you can use. And then once you've done that, you want to come back to your set of projections and compare. So for example, in the restaurant industry, we found that the average net profit margin was just 3% across all of those businesses. There's roughly 450,000 sole proprietor restaurants in the US, and the average net profit margin was just 3%. So again, as you're taking your numbers and presenting them to a lender, for example, and you want to make sure they're realistic, if your net income margin is 40% and the industry average is 3%, something might be off, or you have some explaining to do. You need to be able to be prepared to explain that, right? And so I would look at, right here, that net income percentage to make sure that that's within reason. I'd look at the gross profit percentage. So if we look back at this, we can see food costs 36%, salaries and wages or labor 20%. So there's your cost of goods sold, basically of 56%. And we can see in our projections here, we start at 62% in year 1, and we get down to 57% by year 5. So we're like right in line with what the industry averages are seeing in terms of cost of goods sold and what your gross profit margin looks like. So the next thing I would do is I would take a look at the income summary tab here. And this table does not automatically or does not already have columns built in with percentages for you, but you can easily add those if you'd like. And so I'm just going to do this as an example to show you how to do that. Let's say we wanted to look at these expenses in year 5 as a percentage of revenue. So I would just say equals, take the advertising expense there, divided by total sales. And then we want to put $signs here to lock that in. And then all we need to do is drag this down. We can actually drag this down all the way down to net income if we'd like, and change it to a percentage. And now we can see, we can get a good visual of these different percentages and whether they seem to be in line. Now, here's some things I'm noticing right off the bat, right? Utilities, 0%, or it's rounding down to 0. That's not what we found here, right? We saw 4% for utilities. Rent, we're seeing 6%. Okay, rent. Here we saw 7%. So maybe we're in line there. And yeah, basically you can go through this process and you should be able to identify some areas that maybe you're missing and some areas where you might be off. And I think real quickly and easily come up with, are my numbers realistic? And so that's the hope with these various data reports that we're producing. And we hope that you'll be able to, if you're working on projections, be able to go grab one of our industry projection templates, fill out your forecast, and then come back to that industry report and compare it and make sure that it seems reasonable. And if it doesn't, if it seems out of line, have a good reason behind that you can share with potential investors and lenders. So with that, if you have any questions, please reach out to us, support@projectionhub.com. And if you found this helpful, it'd be great if you like the video and subscribe to our channel as we try to help entrepreneurs start and launch profitable businesses. So with that, we'll see you next time. Thanks.